What's going on, everybody? And I'm back today with another video, and I'm going to be going over my secret setup using the Fibonacci and the order block. It's not very secret because it's in every single video, but I'm going to be showing you guys how you can map out sniper entries and get crazy trades off of the simple 2 confirmation strategy. And mind you, this is only 2 confirmations that work very well, and I tie these along with another 2 to 3 confirmations, so around 5 to 6 total. So when you have all those confirmations telling you that price is likely to go one direction, it's just very strong. So let's start off with explaining what the Fibonacci and order block combination is. So first things first, going over my Fibonacci. These are my Fibonacci settings for those that want to use it. The 62%, the 70.50%, and the 79%. These are the areas that you get a discount in price when price is trading very high. You want to wait for a retracement. You want to wait for a retracement to either this 38.20% continuation level. And the thing with this level is if price is in a strong trend, it will only retrace to about the 38.20% before trading higher. But when price wants to come down even lower and fill in the liquidity gaps that it left in the market, fair value gaps, and just have a stronger retracement, is going to come down to at least the 70.50%, which is my optimal entry that I like to get into before trading higher. So this by itself is a very strong confirmation, and you could tie this continuation level, you could tie with breaker blocks, because for the most part they tie together with breaker blocks. And with this, when you wait for price to come down to 62 to 70.50%, this usually ties with order blocks. And if you don't know what an order block is, order blocks are basically like a footprint from when big banks are trading in the market. Because when there's large candles, for example, bullish engulfing or bearish engulfing, you need a lot of money to make these candles. Us as retail traders, we can't move the market and we can't make candles of that. When a candle forms, for example, I'm gonna show you guys some. For example, right here, we had this up candle, and then we had a down candle that then ate this whole move, breaking the low, bodied everything. To be able to make a move like this is not going to be retail trade. There is big money going into the market at these areas, big money. So when price does these things, the chance of it retracing to these areas and then having a reaction is very high, because we know that since the big traders, the big banks, the institutional traders, they are the ones who are basically pushing the market from these areas. And when we know that, we know there's a lot of areas, there's a lot of orders in this area. So when there's a lot of orders, price is either going to have a push to the up or the downside, and that's just that. So now that you understand what the Fibonacci is, you understand my Fibonacci settings, you understand what the order block is, and if you want better understanding, I have previous videos on order blocks and Fibonacci's, but this video is just going to be going over how you can use the two together to get great setups. So first things first, we're going to start off on the higher time frame. So let's get rid of that. Start off on the higher time frame. And one little setup I'm going to show you is going to be right here. This is on US30 on the daily time frame. Yes, this is hindsight because the market's closed. I can't show you live examples, but I have live examples that I do every single day right over here in my Telegram chat. I actually catch these trades live. So if you want to see live trades of me actually going over these trades that I take and actually using these combinations and mapping out what I want to see in the market, trying to find a little live trade, catching trades like this off of these areas, I'm going to be showing you how to catch these trades right now. But if you want to see them live, join the Telegram, because I can't really do it on Saturday. The market's closed, so hindsight is all I could do. So this is the first example. The one thing you want to do when you're using this Fibonacci and order block combination, you could use as a strategy, but I just call them confirmations. You always want to wait for a market to have a retracement, because when you wait for the market to have a retracement, the chances of price continuing that trend are going to be higher than you just buying at a high. Because when you're buying at a high, the chances of having retracement or reversal are stacked against you. So you just want to make sure you mitigate risk and you buy at the lowest price possible and you sell at the highest price possible. So for right here, we're looking at this price swing from this low to this high. And what I would do simply, I would map out areas of liquidity, which is right here. And if you don't know what areas of liquidity are, is basically swing highs, swing lows, equal highs, equal lows, all of that, because this is where the market targets in price. So the first area I noticed is right here. Price had a breakdown, broke these lows, and then rejected right away. But if you look to the left, what was it rejecting? See this last down candle before having this up move? This is classified now as a daily order block. It's a bigger order block than ones that you would usually find, but the concept still works. Now that we know that this is a daily order block, we know that we're waiting for some sort of reaction in price in this area. So what do? We know that we're waiting for a reaction, but that's not enough. So what do? We pull our fib from that high to the low. Then what do we see? Now it's also rejecting the 62% of this level. And we also see it's respecting 34,800, which is another confirmation. I'm gonna have a video on the big figure levels itself, so don't worry about that. But we have 2-3 confirmations for why prices potentially go up right now. And mind you, this is on the higher time frame, so this is going to be a major, bigger trade. So now that we have all the confirmations that we had a false break below these lows, grabbing the liquidity. Plus we have a daily order block rejection. Plus we have a fib long rejection. Plus we have 34,800 level being respected. So these are the confirmations we have. But the main ones we're paying attention to are the fib and the order block, because the 34,800, all that doesn't really matter at the end of the day. It matters, but we're looking at the confirmations. So understanding these prices, these areas in price, when price retraces daily order block, you would have been looking for scenarios on lower time frames, or even on this time frame, the daily, to look for potential shorts, looking for potential longs, my bad. And one thing you could do, the way I tend to have my stop losses, I try to keep them under the 50% of the daily order block, because understanding the 50% or the midpoint of order blocks, you understand that if price comes past and goes lower than the 50% of the midpoint, the probability of this order block being traded through are going to be higher and more likely. But as long as price stays above the 50% of this daily order block, or any order block for that fact, the chances of it still being respected and going your intended direction are going to be higher. So for this example, you keep this is a 369 pip stop loss. Mind you, you're on the daily time frame. You would be looking for a potential, this is a 1 to 2 trade on the daily time frame. You can map out even better trades on the lower time frame, but this is just for example purposes. You waited for price to come down to the daily order block, you got in, had your stop below, you saw that price was respecting the 62%, and you're automatically going into profit. So from here, what would you be targeting? You could target this other order block we have up here, which is also a daily order block, but this is a daily bearish order block. So meaning when price comes to this area, this last up candle before this down move, you know there's going to be likely to see a reaction in price to the downside. So even if price does want to come higher and see higher prices, it is very likely, but you want to be able to get out in time to make your money, and you just don't want to be greedy in the market. You want to get out and just get your money and just call it a day. So let's just let it play, see what happens. From here, you can see price starts to have this expansion, and you can see there's a lot of momentum. And mind you, you're now about 400 pips in profit, and that's a lot of pips. From this is 1-2 days only, 400 pips you could have potentially caught. We let it play more, comes almost right to the TP, and let's see how it reacts at this daily order block. Now that you would have been out, and look how price respected this daily order block. This on the daily candle, this on the daily time frame. Yes, this is hindsight, but I'm telling you guys, go practice it yourself. Look at how price respected this daily order block. Now that you're out the trade, you could have been looking for potential maybe short scenarios, just like this. And what do you see also? Price is in confluence with this daily order block. We know that 35,500 is right here, so price could likely trade into it at some point, possibly. We're also rejecting the 70.50% of this fib short that we have from this high to this low now. So let's move this to here. Let's get rid of this one. So this is a trade that we were able to call in the daily time frame that would have played out fully in 4 days, and that for potential 1 to 2 on your risk, depending how much you risk. So if you risk 2%, you would have potentially made 4%. But now we know that price, we got out early. So price, even if it does want to come higher, we got out, made our money. So now we have these other confirmations. So now what if we wanted to go short in the market? You saw this opportunity. Now let's get the 50% of this daily order block right here is also in confluence with the 35,500. So when we put our stop in the market, you would be wanting to keep it above this point. You would at least want to keep it above the 50%. In this case, you could possibly even keep it above the order block. This is not that big of an order block, but if you want the best entries possible with the maximum amount of reward and little amount of risk, keep it above the 50%, keep it above 35,500. And where would we target? We would be potentially targeting this order block, or even the 50% of this order block, or just targeting these numbers by itself, 35,000, 35,200. So let's just say our first target was 35,200. Using our confirmations, we have the daily order block confirmation, we have our fib levels being respected, and we also have just basic higher high, higher low market structure. So just off of those simple confirmations, let's see what would have happened if we got in a trade at this area in price. Is it going to stop us out? Is it going to respect this daily order block, or is it going to go straight to profit? Let's just see. You can see it trades up into the 35,500 area, which we knew was a high probability, before trading all the way down to 35,200. In this case, you wouldn't have hit TP. Let's see if it does it next. Hits TP before flying all the way up. So this is almost a 1 to 2 trade, almost. Maybe if you had a little bit or stop loss, but this is just hindsight. So let's just say 1 to 2, for example, of our daily order block levels. These are simple trades that you can catch. Simple trades because you're mapping them out on the higher time frame. Like I said, you could use this on lower time frame. You could use it on any single time frame, any single asset class, stocks, crypto, indexes, forex, anything. But you just use the simple concept of understanding higher probabilities of trading on the higher time frame areas, because this is an area that price respected. Now let's see what price does. From this daily order block we have up here, look where price went. And these are actually trades that I was able to personally catch myself using these higher potential areas. And I even have those videos on my weekly markup videos from 1-2 weeks ago, showing you guys that I did this live, showed you that we were likely to have reaction. And look what price did. If you look even deeper, look how many times we rejected. We rejected 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 times. Our stop loss would have never got hit if we kept it above. But say you wanted to hold that trade. Say you did hold that trade for, I don't know who would be able to hold that trade. I personally wouldn't, because this is like a week, 2 weeks away now. Say you held it, had your stop above here. You took your first profit here, but you still held the trade. So you made 1 to 2, maybe took a little profit, but then said you held it down to 35,000. Boom, 1 to 3.6 trade. Then say you wanted to hold it even longer, hold it to the next level, which is 34,800. Boom, this is a 1 to 5 now. Held it even lower, you wanted to hold it to 35,000. This is a 1 to 7 now. And mind you, say you would have got really devious on the hour time frame or whatever, or on the 4 hour, let's just say, and you try to have the maximal amount of stop loss. So say when you got into this trade, you saw that there was a 4 hour order block also up here. So say you never got into this trade on the daily time frame. Say you waited, you understood that price is going to have a push to the downside of some sort if we respect this daily order block we have right here. So say you wait, and you understand it's a daily order block, and you understand where the 50% is, which is right here, right above. So you understand that this is what our higher time frame, and we also see on the lower time frame we have this 4 hour bearish order block also. So say you waited for price to come there to get the best entry possible. Say you were ready to be able to lose this trade or whatever. So say you waited and then you got in around 35,000. Let's just say 35,000. had your stop. Let's look for the 50% of the 4-hour order block, which is right here. Kept your stop right above the 50% of the order block, which is a 77 pip stop loss. Now look at the potential from that area trading down to 35,200. This is a 1 to 3 trade already. So you would have made that the first day. Say you held even longer down to 35,000. 1 to 6. 34,800. 1 to 9. 34,500. This is now a 1 to 12. Off the simple fact of you've refined the order blocks using the Fibonacci levels and daily order blocks to map out this trade. So now that you see that this is potential on the higher time frame, now let's look for an example on the lower time frame, just to show you guys that is not all hindsight, and you can find examples of this on every time frame every day. We're just going to go down to the 5 minute. We're going to go to a random point in time. Close my eyes, random point, refresh, and just like this. Okay, let's go to the 15 and 30 minute just so I can understand what's happening. 35,200 we're respecting, came above these highs. In my opinion, what I would do, I would pull the fib. I will pull it from the low of the high of the range we're currently in. I understand that we broke these lows on the downside, so this was a false break. So ideally I'm bullish as of right now, so because we got the lows cleared before having this rejection of 34,800 to trade all the way up here. So as of right now, I'm waiting for a retracement to go long in the market. We have these areas marked up. We know that we have other confirmations, but where are our order blocks? Let's go to the hour time frame. We have an order block right here at the 70.50%. This is 1 hour order block. So this is a potential intraday trade you could catch. So what I would do, I wait for my retracement and let's see what happens. Let's just see. You can see price is respecting this area. As of right now, price came down, cleared these lows, and started rejecting. So now it come down to the 5 minute. We can see that 38.20% wasn't respected, so we could take that off. But there's still a chance that this fib could be respected. Why? Because we're about to close above the 79% after clearing these lows. So meaning we can still be bullish. So what would we do? What do we have right here? We have this order block right here. Matter of fact, I'm not even going to use that one. Was this respected all the way down here? I'm trying to see. Nah, that order block wasn't respected. Mind you guys, I'm doing this all live right here. On the 30 minute, was there even an hour one? The hour one right here. So this order block wasn't respected, but this one was. The last down candle before this up move. You can see that's where price is currently respecting. Right there. So now back to the 4 hour, 5 minutes. So now we see that. Let's see what happens with price. We have another push down into this 4 hour order block. So now that first trade we were looking at in this area was invalidated. So what we would do, we're just going to pull our fib from this low now to this high and see what price is likely to do. We see that it's respecting 79%, is respecting this 34,900 area, is respecting this 1 hour order block we have right here. So say now, after we broke these lows, cleared these lows, traded into this order block, traded into our fib levels, you were looking for a potential scenario to go long at this order block. So okay, so now you know that. Let's find the 50% of that 1 hour order block, because mind you, we're on the 5 minute, so this is from here to here. We keep under the 50%. We can even have it under these lows also, just to be safe. And where would you want to be targeting? Your first target could be 35,000, and this will give you a 1 to 1.5. And if you wanted to trade, get an even better trade, go to the little higher time frames and map out another order block. And the first one I see on the 30 minute is right here. This 30 minute order block. Last up candle before this down move that broke these lows. And if you take partials there first, that is about basically a 1 to 2 trade. So now go down to the 5 minute and let's see what happens. Let's see what happens in price. comes down a little bit, pushes up, ranges, comes to the 50%, pushes. Okay. It's ranging as of right now. Mind you, the thing I don't like about the back testing is it's hindsight, so you don't know what time this is all happening either. Because I would be wanting to take trades in the morning. And as you can see, in this case, price range majority of the time, which is not ideal. I wouldn't have been in this trade very long. But let's just play it all out to see what eventually would happen until our stop loss or TP gets hit. Damn, this was horrible. This just started ranging horribly. Ranged horribly before trading all the way up. This is an example of a trade that would have played out, but it wouldn't have been the best trade due to the fact that this was during Asian range. But you can see it ideally still played out using the 1 hour Fibonacci, using the 1 hour order block, and understanding keeping a stop below that 1 hour order block also, just like that. So we could delete all these just real quick, just so we can see where price ended up going. Came all the way back up to 35,000. And if you would have held that trade, would have kept on going before coming all the way down, stopping you out. I'm going to find you guys another little example on the 30-minute. I've done the daily. I've done 5-minute mixing. So let's just find a random example on this. Close my eyes, go to random part, refresh. Okay, this looks like a nice little clean example right here. Overall, I'm just gonna say I'm targeting these highs. So what would I want to do? I'm gonna wait for a retracement to this order block that we have right here on the 30-minute right here. This is the last down candle before this up move. Let's also pull our fib from this low to the high. So now we have multiple confirmations for a reaction in price in this area. So we wait. We come down. Said we would have been waiting to get into the trade. In this case, this is hindsight. This price did move up. But say you waited to get in at this order block, which is in confluence with the 70.50%. And then you put the stop loss at the midpoint, under the midpoint of this. So right here, maybe. So this is a 25 pip stop. And where are you targeting? You're targeting these highs. Why? Because you know there's liquidity all above these highs. And by liquidity, I mean there's a whole bunch of buy stops or stop losses from people going short. So this is where you would want to target. And then if you come to the hour time frame, you see that there's also a 1 hour order block all the way up here that you could potentially want to target long term also. So this is a potential 1 to 6 trade we're mapping out. Mapped out from the 30-minute time frame, and we're already about in profit, showing you that price is respecting this area. And let's see what happens. In this case, we got stopped out after being in 96 pips profit. So if you would have been up 1 to 3, it would have been up to you whether you took percentages off or not. But in this case, it stopped you out. But let's just see where price went from here. Yeah, in this case, price just started melting. But you can see you're not always going to win trades with this. That's why you always have to keep risk management as your #1 priority, because you can have every confirmation in the world and the trade still won't go to your way. But just understanding, guys, that you could use this Fibonacci and order block combination to map out very good trades on the higher time frames, which is the best probability for any traders, because it gives you the best chance when you're taking these trades. The higher the time frame, the more likely these trades are going to play out. And even if they don't fully play out, you're still able to catch 50 to 100 pips of that major move. That's all you need. That's all you need. So if you guys don't believe this works, just go back test it yourself for yourself, live trade it, demo trade it. You're going to see that these combinations work. And if you manage risk and only take high probability setups, meaning you only take trades that are going to offer you a 1 to 3 or a 1 to 2 at least, you're going to win majority of the trades. So even when you do take these losses, as long as you don't over trade, you're still going to be net profitable overall for the long term. So that's really it. I just wanted to give you guys this little video on the Fibonacci order block combination strategy, whatever you want to call it. But honestly, just stacking together confirmations for trades is what I do best. My strategy as a personal trader is I just trade with confirmations. I'm a confirmation trader. That's really it in simplest terms. So hopefully this video gave you an insight on how I trade. This is only two of a few confirmations I use. As you guys see, when I mark up my videos, I have other things I look for also. But if you just want to keep things nice and simple and test out a little strategy, this is something you could try. Let me know how it works for you. Back test it, forward test it, demo trade. That's it. Subscribe, click this button, like, comment, subscribe, click the notifications, and I'll see you guys in the next video.